In this video, you'll watch clips from my live trading sessions over the past few weeks. In these streams, I had both successful trades and experienced some challenging moments. Let's take a look at these sessions together. Last week, I held 3 live streams on December 9th, 10th, and 12th. I recorded the trades I took during these streams without any interruptions. Each session lasted about 2 hours on average. I conducted these trades during the US market open within the time frame we call RTH, or regular trading hours. In my trades, I used the volume profile. I analyzed my first trade on the futures side, but executed it on the forex side, specifically on the S&P 500 contract. So let me give you a small tip. You can analyze with futures data and still execute trades in forex. The system I use when analyzing my chart works like this. When taking a trade, I actually pay attention to 3 things. The first is key levels. I determine these key levels using the volume profile. By looking at certain components of the volume profile, I identify the levels that are likely to see a reaction on that day. I prefer not to enter a trade until the price reaches these levels. I watch for the reactions in those areas and then enter the trade. Of course, there can be exceptions, and in fact, some exist even in the trades I took here. Alright, let's look at the trades from December 9th. As you can see, I identified a zone here. I'm gauging the potential reactions from this zone. In the previous session, the price experienced a downward move along with the news flow and started a trend. So, I identified a zone below the current price and started looking for a reversal trade. Of course, if the price breaks below the zone I identified, the bias would still be to the short side, meaning the downward trend would continue. In that case, I would look for a trade there as well. But for now, I'm waiting for a reaction and hunting for that opportunity. My search for a reversal trade ended when the zone I had identified was broken to the downside. From there, I entered the trade on a pullback. My risk-to-reward ratio is 1 to 2, meaning I risk 1 unit to aim for a 2-unit profit. I had been live for an hour, and at the end of that hour, this trading opportunity emerged. At the TP1, take profit 1 level, I close half of my total position and move my stop loss to my entry point. This way, by reaching the break-even point, I completely eliminate my risk. Now, even if I get stopped out, the profit I've taken is already secured. At worst, I won't make any more profit, but I also won't lose anything. I will continue on my way with the money I made at TP1. After the price consolidated for a bit, it also hit the TP2 level. And that's how we actually concluded the live trading session for December 9th. Okay, now let's take a look at the trades I took on December 10th. Again, I started my live trading session at the market open. On the right side, I have my volume profile chart. By looking at the volume profile, I identified some key levels and reference points. I plan to hunt for a trade when the price reaches these levels. My expectation for today was this. Due to the strong downward trend from the previous day and the day before, my approach was to be a bit more cautious with long trades. I ended up taking a trade before the price reached the levels I had set. Here, I saw a reaction from the upper boundary of the volume profile's value area and thought the price could continue downwards. When the price pulled back a bit, I confirmed this setup on the Renko charts and the VWAP line. It was actually a reliable setup, but I broke one of my rules here. I wasn't supposed to open a trade before the price reached the reference points I initially identified, but I did. Let's see what the outcome will be. For those who don't know what VWAP is, let me explain it briefly. It's essentially a volume indicator created by adding actual volume to the calculation of a moving average, and it helps us track dynamic support and resistance levels. As for Renko charts, I've explained them in my previous videos. If you like, I've left a card in the top right corner. You can watch it from there. So yes, I entered before price reached my level of interest, and unfortunately, that trade resulted in a stop out. This time, the reaction came from the point of control level, which is the price level with the most traded volume on the profile. The bounce from there took us out of the trade. That's 1 loss for the session, for about a $500 drawdown. Typically, if I take 2 consecutive losses, I call it a day. But after just 1 loss, my goal is to trade my way back to break even or into profit. That's why I continue to hunt for more setups. The price is now consolidating within a range. It's approaching a level I was watching, and it's starting to show a reaction. I'm looking to act on this. The reaction occurred, and because the context on the Renko and VWAP looked good, I took a short entry. The price attempted to pull back against me, but the reversal failed to materialize. Here, I've identified a new zone on the volume profile, thinking the price could rally up to it and then reverse, which is exactly what happened. We hit our TP1 target, and I immediately moved my stop to my entry point. The ATM, Advanced Trade Management feature in NinjaTrader, actually lets me automate this process, moving my stop to break even automatically. By the end of the session, we hit both our TP1 and TP2 targets. While we didn't end the day profitable, we finished at break even. After commissions, we were only down about $6. So in total, we were slightly red on the day by about $15 to $20. Look, you're gonna have losing days, and you're gonna have break-even days like this. It's all part of trading. You can't win every single trade, and not every day is going to be a green day. If it were that easy, everyone would be doing it, and everyone would be profitable every single day. All right, let's move on to the third live session, breaking down the trades from December 12th. I did trade on the other days, but since I wasn't streaming, those weren't recorded. When I don't have anything else going on, I'm at my charts about half an hour before the market opens. My trading session is focused on the US market open, where I'll typically spend 2 to 2.5 hours, 3 hours at the absolute most actively trading. Of course, this is my focused trading time. I might be at my desk for other things outside of this window. Also, as a note, my first trade on December 9th was in the forex market. The trades from December 10th and the ones I'm taking now are on the futures side. I execute these trades on the NinjaTrader platform, which I actually cover in my course. You can find more information there if you're interested. For now, I'm just going to explain how I took these trades. In the previous session on December 12th, we saw a massive rally in the market, which was, of course, news-driven. As always, I start by mapping out my levels. I've highlighted some zones that I consider significant with boxes on my chart. The market was stuck in a sideways range for a good while today. It took about an hour before I could get into a trade. I got a long signal as the price reacted off my zone. I could have actually entered this trade earlier, but in a downtrend, you don't want to jump into a long position just because you see a small bounce. That's why I chose to be more patient. I entered the trade after seeing a pullback that confirmed the start of a move to the upside. And of course, I also use VWAP for dynamic support and resistance. Here, I actually adjusted my TP1 target, pulling it a bit closer, because I sensed that the momentum was fading and the price might not push much further in my favor. And with that adjustment, we successfully hit our TP1 target. My goal now is to get my risk off the table. I do this by trailing my stop, moving it up as the price moves in my favor. However, the price didn't follow through as expected and ended up hitting my stop. And with that, the trade for the day was complete. Generally, if some time has passed since the market opened and I'm just getting into my first trade of the day, that single trade might last anywhere from half an hour to a couple of hours. If that trade is a winner, I don't take any more trades. Of course, if I get an entry early in the session, I might hunt for a few more setups. But what's more important than just taking trades is not being fatigued and being in a good state mentally and psychologically. The longer you stare at the screen, the more mentally drained you become, and it takes a physical toll. As a result, when I don't feel right, I stop trading. I wouldn't recommend it to you either. Too much of anything is harmful. It might be a cliche, but it's a very real principle in the world of trading. So those were some of the highlights from my recent live trading sessions. As you saw, trading is a mix of profitable moments and challenging ones where you have to stick to your plan. I hope this transparent look helped you understand the real dynamics of the process. If you're interested in learning the logic behind these strategies in depth and building your own trading plan, feel free to check out the course I've prepared. Don't forget to subscribe to stay updated on future videos and potential live streams. Thanks for watching, and stay tuned.